Good afternoon, everyone. This is Anthony Locke with Torrey Hills Capital, and welcome to the Ascendant Resources webcast for March 23rd, 2023. Hope everyone's doing well, and thanks for taking the time to join our virtual lunch. We are very excited to bring you Ascendant Resources. Ascendant Resources is a Toronto-based mining company focused on the exploration and development of the highly prospective Lagoa Salgada project, located on the prolific Iberian Pyrite Belt in Portugal. This particular area has proven to be one of the most prolific VMS deposits in the world, and we feel that Lagoa Salgada has the potential to be a world-class deposit. Company trades on the OTC under the ticker ASDRF and on the TS Venture, under the ticker ASND. Currently trading with a market cap of about $30 million Canadian. With the results of the upcoming pre-feasibility study due in the coming months, and the robust economics of the project, as well as potential for expansion, we feel that there's plenty of upside in the stock at these levels. With us today to discuss Ascendant Resources operations and growth strategy going forward is the company's executive VP and co-founder, Cliff Hale-Sanders. Cliff, it's great to have you on today, and thanks for taking the time to bring our viewers up to speed on Ascendant Resources. Looks like 2023 will be a pivotal year for the company, and I'm excited to have you share the developments with our group. But before we get started, I just want to mention, if our viewers have any questions during the presentation, simply type them into the Q&A or chat box, and we'll make sure that they get answered. So with that said, I'm going to turn it over to Cliff. Cliff, the floor is yours.
Great. Thank you very much, Anthony, and thanks everyone for being on the call today and giving me your time to listen to the Ascendant Resources story. And as Anthony alluded to, we think we have a very much underknown story within the market. Ascendant as a corporate entity has gone through a few changes over the last year, and perhaps that's given us more of the under radar opportunity to develop the Lagoa Salgada asset. But what I hope to demonstrate today is, obviously we have our one asset today, which we call Venda Nova as our primary deposit, is the potential for this to be a new and emerging VMS camp within the Iberian Pyrite Belt. So with that, I'll dive into the presentation, as Anthony alluded to. If there are any questions, and I'm sort of happy to have them interjected as necessary, so they're more pertinent and timely.
Absolutely. I'll stop you if any come through. You got it.
Okay, so quickly, just an overview of where we are and what we have before we get into some of the more traditional presentation styles. The Iberian Pyrite Belt stretches across from Spain to Portugal. Very numerous well-known assets within here. Neves Corvo owned by Lundin, Aguas Teñidas now owned by Sandfire. They paid $1.8 billion for that last year. The Las Cruces copper mine, the Rio Tinto mine owned by Altalea. You've got a few other development stories in the region as well. Lagoa Salgada project is further north on the Portuguese side of the belt. And one of the reasons why it hasn't been defined and delineated as much as the Spanish side is on the western side of Portugal here. There's a significant amount more cover in terms of tertiary cover, roughly about 100 meters. And that means it wasn't exposed to the surface and outcropping, making discovery significantly easier. Discovery has taken more of the geophysical approach, so a lot more modern technologies and approaches were used to initially discover it, and we're using those now to continue to grow it. As I said, today we have what we term the Venda Nova deposit within the Lagoa Salgada property boundaries. That is just a very small portion here within Venda Nova. We call it next to this LS North sector, within an 8-kilometer anomaly. So we've only really targeted the top little half a kilometer to a kilometer strike length, with plenty of room to grow over time, really just constrained by capital at this point in time, and a focus on bringing the Venda Nova project to fruition in terms of a fully operating mine to generate cash flow and minimize long-term dilution. So why should people like yourselves have an interest in looking at Ascendant Resources? One is that district scale potential, and we'll get into the details, but we really believe that at Lagoa Salgada we have the potential over the next decade or so to become the next Neves Corvo or the next Aguas Teñidas mining operation through ongoing discoveries once we have that core tenant asset at the Venda Nova deposit secured. The Venda Nova deposit itself is open in all directions, very much under-drilled, and plenty of room to expand, and we'll talk about that as we go forward. And because of that and recent geophysical work, we have plenty of targets to continue to follow up as we continue to define the deposit. The Iberian Pyrite Belt is one of the largest VMS districts in the world. So again, we have lots of precursor information we can use to continue to grow that deposit. And that geophysical work continues to ongoing with multiple resource expansion opportunities. That being said, obviously there's a lot of exploration, and we'll talk about that as we go forward. But why we're very confident in the asset is that the Venda Nova deposit by itself is a very robust anchored deposit for initial development. We completed a PEA in 2021 that outlined a post-tax NPV of US just under $250 million and an IRR of 55% at what I would view as relatively conservative long-term metal prices in light of the current market. EBITDA was significant at US about $150 million per year in the first 5 years of operation, as it is a little bit front-end loaded. CapEx is expected to be relatively modest in sort of that 160, 170 range for this initial asset and long-term opportunities for future growth. When you look at the management team and some of the wider team within the Ascendant Group, whether they be on the advisory board or board of directors or directly in operational management, there's a long history of successful development from early stage exploration through construction and then into operation. So the team has done it before, focused on areas like Brazil and other districts in the past as well. So we have a track record for delivering on growth, and management and directors are very much in line with shareholders having a significant stake in the company. And we also have a very strong in-country exposure within Portugal with a well-established group of operators. Further, just when you look at the jurisdiction where the Lagoa Salgada project is, you couldn't ask for more supportive infrastructure to already be in place, be it power, water, roads, and access to the various ports required to distribute the concentrate products. Just to highlight how supportive the regional governments are and at all levels, the project has been granted what's termed a project of national interest in Portugal. And this is probably the first mining property that's ever been granted this designation, and really underscores that we will have favorable labor rates and tax regimes within the country. And the only way this designation can be derived is through local support, and really underscores that the local community is very supportive of this project being developed going forward. Just a little bit more detail on where we're located. Current land package is roughly just over 7,000 hectares within that northwestern pyrite belt in Portugal. It's approximately 80 kilometers south of Lisbon, so about an hour's drive on a 4-lane highway, very easy access. Ports, water, and everything is in the jurisdiction. We actually have several ports we could export from: Subitel, Port of Lisbon, and others. The project geological setting, it's what is termed a blind discovery. It has about 150 meters of cover above it. This is just sediments and loose material. So but it is a typical VMS deposit in the sense that it has your Gossan deposit, your massive sulfide deposit layer, and then a stringer layer underneath. So you see these three distinct regions, again, very reminiscent of what you see at the other deposits in the region. So nothing new or unique here. It's really just a timing of discovery. As I said, today we have an initial resource at Venda Nova. That's really broken into two zones, aptly named the North and South Zone, and combined they have about 27 million tons. The North Zone is more zinc rich at about 8.5% zinc equivalent, and the South Zone is a little bit more copper rich at just under 1.3% copper equivalent. And both of those deposits continue to grow on along strike at depth, and as we'll demonstrate on a step-out basis to other potential VMS pods. As if anyone knows, VMS deposits tend to occur in multiple pods and not one solitary discovery. And we've already outlined two that we're currently drilling. Would hope to have some results in the not too distant future. Venda Nova deposit, as I said, the PEA was roughly just under 250 million with an IRR of 55%. That was a 14-year mine life with average zinc equivalent production of 130 million pounds and an initial capex of 132. We do expect to complete a feasibility study on the project in Q2 of 23, and we'll get into that. And some of those numbers obviously will move around a little bit in light of inflation and things of that nature, but we think we'll pretty much be on target with these sort of valuations in that feasibility study. So when you, again, just looking at Lagoa Salgada and the Venda Nova deposit being that anchor deposit, as I've already done the PEA specifics, and obviously if we use current spot prices relative to the PEA, we get a significantly higher valuation, and even the rising long-term consensus prices relative to when we did our PEA have again continued to support a higher valuation. What attracts us most to this project, to be honest, is the high IRR after tax. We're a group of individuals who are more focused on making money than making metal for the sake of metal, and whether that's copper, zinc, lead, gold, silver, it really doesn't matter. The question is, do you make any money? And that is our focus without question. When you look at the split of commodity exposure, you're pretty much even in terms of 2/3 base metals between lead, copper, zinc, and a little bit of tin, and then you have significant gold and silver. And you'll be mining, it won't be continuous, the dispersal of metals, because you will be mining through various zones of the deposit, which is typical of VMS style deposits. But what we do like about it, and we'll go into a little bit more detail, is when we compare Venda Nova today to other more well-established targets, such as McIlvenna Bay, which is Foran, Flin Flon, which is a historical Hut Bay operation, Matza or Nevis Corvo. We have the similar sort of grade profile, but we haven't had the time to deliver on expanding the tons. So we believe the potential here to grow from our current sort of 13 million tons in the north deposit of massive sulfide to a significantly higher margin with more exploration and time is very compelling. So what are we doing in the next sort of call it 2 years to bring this project to fruition? Obviously, we've recently completed all the drilling required to upgrade the resource. So we're currently doing that detailed resource modeling to upgrade the resource that'll backstop the feasibility study. At the same time, we have kicked off some exploration drilling at 2 geophysical targets, and we'll talk about those in a moment. But the key things will be completion of, as I said, the resource update, detailed metallurgical test work, which is ongoing. Those 2 will dovetail into completing the feasibility study in Q2 of this year, which we really believe will underscore the economics and the attractiveness of this deposit. During that time, we'll complete the environmental impact study. That should be completed again and approved by the end of Q3. Then we go through what is called the recape process in Portugal, which really is a Q&A session for the public and other people to make some comments and answer to them. Once that process is completed, construction permit is expected to be granted in Q4, early Q1 24, and we kick off an 18-month construction period, and we believe we can be in production in the second half of 2025, which for a mining story is really not that far from today. That's roughly 2 years. And the real reason why we're able to do it on an accelerated basis is because of this PIN designation of the project, which really condenses some of the permitting process by allowing the project to go to the top of the pile within the various agencies that have to review the project.
So you think that 18 months, do you think that timeline could be compressed further from Q4 2025, Cliff?
No, I think this is already kind of building in that compressed profile. Okay. The government has committed to this profile. And what this PIN process really means is we have what's the best word? A champion that kind of makes sure that our project is being reviewed by the various agencies in a timely fashion. So it's not going from A to B to C. They're all looking at it at the same time and communicating to make the quickest decision, but the most appropriate decision as well. So we think this will really underscore what we have today in terms of to be developed, and what we will look to obviously then underscore with some project financing and other support there to deliver the Venda Nova deposit. But then we'll also continue to explore, to continue to grow the asset, which, to be honest, I think over the long term is really going to provide significantly more value. Obviously, Venda Nova by itself, relative to our market value, is a significant opportunity. But I think when you look at the district scale potential that we see within the land package, that is really what is going to make this an exciting deposit over, call it, the next 5 to 10 years.
And that time frame from the PFS to production that you have on there is still a very, very short period of time in terms of mining life.
Yeah, and to get into the details, and we'll have a little bit more in a bit. It really is a relatively simple mine to develop. It's just a box cut, and then you ramp down to it. It's only about 150 meters deep, so you're not going very deep. The amount of early stage pre-development work is modest. The plant size is off the shelf, roughly 2 million tons per annum throughput. So you're not rewriting the book here, and we have a lot of previous experience within the Iberian Pyrite Belt to do this in a short period of time.
Great, thank you.
So when you look at, I'm sorry, my screen froze. When you look at the jurisdiction that we're in, and what really excites us beyond just Venda Nova, it really is that potential that has been seen over the belt over hundreds of years. This is not a new area of discovery. As I said, Rio Tinto mine has been around since the Roman times. So this has been a well-established mining district, very well understood. And as I said, previously more developed on the Spanish side and the Portuguese side due to the tertiary cover that overlays a lot of this Portuguese side of the belt. Neves Corvo was exposed at surface initially as a small copper tin mine, and now it's down roughly 2,000 meters. So lots of room for us to grow at depth. And so within the belt itself, not all of these are economics. There's over 250 deposits that have been to date known to exist that are rich in copper, zinc, lead, and tin, and over 1.6 billion tons of ore have been defined. So again, we're trying to emulate what has already happened. And when you look at our neighborhood, we're probably 25, 30 kilometers north of a mine called Aljustrel. It's Almina, it's private. It's roughly has been, including what has been mined out, 270 million tons. Neves Corvo, when you look at their total asset package prior to mining, 300 million plus tons. Aquastanitas, which is now owned by Sandfire, it's over 150 million tons that has been defined and mined out. So again, we still see ourselves very much in the infancy of really bringing this project forward. As you see, there's a lot of activity in the space itself. You've got Pan Global and Emerita both developing various assets along the belt. And just for the sake of highlighting it now, we have a significantly lower valuation than either one of those projects, and yet we're at the feasibility stage of defining an actual mine.
Yeah, there's clearly a disconnect between the value of the company and the market cap. But has there been a lot of M&A activity in that area? And what have you seen in terms of M&A activity in that area that would speak to your valuation?
Well, the biggest M&A, to be honest, is Aquastanitas that was acquired by Sandfire out of Australia from Trafigura and a group called Embadala, which is a Middle Eastern fund. They paid 1.8 billion for that. It has been rumored, and I have no verification of this, that Lundin was looking to sell Neves Corvo for $1 billion. We haven't seen any M&A on the smaller front at this point in time. Doesn't mean it's going to happen. We're not focused on that. We're not really looking for that or interested in it at this point, given our relative valuation at this point in time. So we're trying to continue to keep our head down and do the work that's necessary to highlight the value and get a more appropriate valuation in the market.
Absolutely.
But really trying to highlight where we are relative to these other discoveries that have been in the belt. Right now we've only done to outline the 28 million tons of resource in the north and south sector, a relatively modest amount of drilling. 52,000 meters of drilling is not much for one of these deposits. When you look at the amount of drilling that was done to identify both Neves Corvo and Aquastanitas at their initial stage, we're kind of in that ballpark. That was a little bit more for Neves Corvo at the roughly 200,000 meters of drilling, 62,000 meters of drilling for Neves Corvo. But today, through the drill bit, both of those companies have tremendously grown those assets. So I think over time, not saying we'll be 150 or 300 million tons, maybe we will be, but clearly there's lots of room for us to continue to define and outline more targets as we go forward. We've just been restricted on really aggressively pursuing greenfield exploration due to capital constraints and a focus on delivering the feasibility and the required infill drilling first. Again, when you look at us compared to Sandfire and Lundin, as I said before, the key thing for VMS deposits is the actual ore zones occur in what we would call pods. That's it's kind of an odd term, but as you can see at Aquastanitas, there's numerous pods spread over a strike length of 7 kilometers. Lundin is more vertical, over a 4-kilometer strike length, but they've got 4 distinct mining zones. We currently only have 2, And as we'll highlight, we've got anomaly D, anomaly B, and more at depth. But we're only looking currently over a strike length of 1.7 kilometers. If you remember from my initial slide, the geophysical target is actually 8 kilometers long. So plenty of room over time for us to continue to grow. It's, it takes a little bit of time, a little bit of vectoring because it is not exposed to surface. So you have to make sure your geophysics is right before you start drilling. Just on that, as I said, we have these two anomalies, anomaly B and anomaly D. We're currently drilling both of those, just the initial hole. So, we may or may not hit to be exact, but we'll continue to follow up with more geophysics because they are giving the similar readings as the geophysical signature of the Venda Nova North Zone, which is the massive sulfide, which is the real, the juice of the economics, to be honest about it, of the Venda Nova deposit. The South Zone is attractive, but not as attractive as the North Zone in terms of overall economics. So we have commenced a 5,000 meter drill program. As I said, we've only, we're getting down to the bottom of one hole and just starting the other. But these are the first two well-defined targets, and we'll continue to look to define additional targets over the course of this year and into the future. Now, why do we like these targets? What makes them attractive? Anomaly B, which we've just started drilling, it's a little bit deeper, so the details are a little bit less confirmed, but it's a significantly large geophysical target, roughly 800 meters long, so larger than the North Zone. It's clearly something there. Anomaly D, which we're drilling at right now and getting close to our target depth, about 400 meters in strike. It's shallower, so it's quicker to drill than anomaly B, and it looks like it could be the folded repetition of the North Zone. So a lot of the same geophysical characteristics of the North Zone. Geology is indicating from the structural geology that we've done that it is the folded zone and really the other side of the limb of the North Zone. So again, a lot of excitement that we're going to continue to grow the deposit. At the bottom here, we've just got a bit of a schematic across section A here, the cross section. And really, we're looking at the cap rocks and then moving over to anomaly B. So we're seeing a lot of the same material that you would expect as we continue to grow the asset. When you look at how we've grown the assets to date for Venda Nova, you can see that we're not even complete there. So obviously, there's excitement in sense of finding new pods in anomaly B and anomaly D, but we're not finished really drilling off the Venda Nova deposit either. And that's going to be the subject of the feasibility study. And so this will be incremental material to the feasibility study when it comes out. And that's because in both the North and the South Zone, we need to drill at depth below those deposits. We know we're drilling and really coming out still in ore. We're also highlighting a very copper-rich footwall zone in the South Zone. We've had 8 meters of 1.2% copper and another 8 meters of 1.6% copper. And those aren't really going to be well enough defined to be included in the feasibility study at this point, but really highlights as we're going deeper, we're getting the variations within your typical VMS deposit, whether it's a zinc-rich zone, a copper-rich zone, or precious metals-rich zone. And even moving to the east of the South Zone, we've seen indications that there may be another massive sulfide there. It really is a question of more drilling required to deliver that. But let's see what we're actually developing here at Lagoa. So obviously, what I've outlined here very quickly is the feasibility study program and based off the PEA that we've done at the Venda Nova deposit, the exploration potential to continue to grow that over the next 2 to 3 to 5 years. But the current short-term development plan, as I highlighted very quickly, is get that resource upgraded. It says February here. Obviously, we're into March now. It's imminent to have that internally. I'm not quite sure that'll be going to market just because it's going to be so encapsulated within the feasibility study. So the mine design and surface infrastructure design are very well advanced on the engineering front. Metallurgical test work continues to be ongoing. That should be complete any week now. It's just unfortunately, as we're seeing around the world, all the various labs are very much backed up, and the work is just taking longer than anyone would like, ourselves included. On the permitting process, we don't expect any real delays. We've submitted our environmental social impact statement in Q1 as expected, and that's supposed to be delivered in Q3 of this year for the construction and development permit. When you look at the mine design, as I again alluded to, very straightforward. We'll have a main access ramp portal sort of design, and then we'll split into two main zones of development. We'll mine selectively from both zones because there is a blending opportunity here to enhance the value of the north and south zone by doing some blending, and therefore reducing any concerns over deleterious elements which are known to be in the Iberian Pyrite Belt. So again, having clean material to mix with some less clean material will increase the value of our product going forward. We do expect to be producing 3 concentrates: a zinc concentrate, a copper concentrate, and a lead concentrate. It may become a copper lead bulk concentrate depending on the results of the network. So as I said, the actual design and development is not overly complex. As I said, it's delivering 1.5 to 2 million ton per annum throughput, and I think we're well established now at that point. And again, that should be coming out within the next, call it 2 to 3 months.
Hey, Cliff, could that 14-year mine life be extended as you continue to drill?
Oh, it'll be as we continue to drill, yes. Will it be 14 years mine life in the feasibility study? It's going to be in that neighborhood. Obviously, the focus has been on infill drilling to upgrade resources to measured and indicated, as opposed to expanding the inferred material at this point in time. We expect over time the north and south zones to actually coalesce into one larger deposit.
Okay.
So, and at depth.
Yep.
So again, it was really a focus of where do you apply the drilling and capital? You just keep drilling for the sake of drilling, or do you try to create something that generates the cash flow to continue the drilling for the longer term?
Right.
So again, right now, as I highlighted, the metallurgy is well advanced and very much more defined than it was in the PEA level. We've outlined various domains within the massive sulfide and stringer material, which initially was causing some issues in the network because they were blending and what have you. By now having better understanding, we're getting much cleaner product, much higher recoveries than we had, and we fully expect to be in line, if not better, than the other mines in the belt. So no real concerns on the metallurgy. We just have to finish the work and get that product out. And all the deleterious elements are expected to be low at penalty thresholds due to our ability to blend the various concentrates from the north zone and the south zone. We may do campaign processing, but we will blend the concentrates so that we don't have to worry about any penalty elements. So, simplistically, we believe as a management team that we're in that value creation phase. We're not seeing a lot of love for the story in the sense of, we're high value and what have you. We're still really defining what Lagoa Salgada is going to be over the longer term. So we've done various agreements to move the project forward. But as I said, the team itself has done this before. If you look back to Largo Resources, Mark Brennan, our chairman and co-founder, the Largo team brought that from very early stage exploration through definition, through construction, through operation. So again, the wider team at the operational level or at the board level, lots of experience moving those through to development. And Largo probably got up to a full valuation. It's come back a bit, but up to about 1.5 billion. When you look at our in-country permitting and operational experience, we have our 2 key individuals, João Barros, who runs our in-country operations. He's been in the mining business within Portugal for the last 18 years and has seen several projects licensed and coming from exploration to production, including Minaport Minas and the other projects there. Unfortunately, my Portuguese is not quite that good. And Rui Santos, one of our directors, is a leading legal advisor within the Portuguese mining community and a significant experience in helping us navigate the process to get through the Portuguese government, and has been an advisor on numerous acquisitions in the Portuguese operational theater. So what are we looking at today? Depending on the share price, it is relatively volatile. Volumes can be an issue, causing some wild swings, but we are fairly tightly held. When you look at management and directors, only 10, a couple of large institutions such as CQS out of London. Steve Lesiak is a private investor in Toronto, Canada. So we've got roughly 40% in tight hands, and a lot of friends and family as major shareholders as well on the free float. So liquidity can be an issue. When you look at the coverage, It all depends on how much value we're getting for the short term and versus the long term. A lot of these analysts, in my opinion, really want to see the financing package to bring our first project, Venda Nova, through to fruition and really daylight the value there. And then we'll probably get more credit for the exploration potential that will come with that once they get some comfort about how we're going to deliver that initial project. Because obviously, based on the PEA, we had an NPV of around 250 million. As I said, give or take, we don't expect that number to change too much in the feasibility, and we think it will be very, very fundable in the relatively quick term to get the full financing package in place, be it a combination of project funding in terms of debt, potentially a stream or equity, depending on the market conditions as we go forward. When you look at us relative to some other regional plays such as Span Global or Emadrita, or Foran developed in McIlvenna Bay, or Adriatic Metals, which also has a VMS project, you see this wide discrepancy in terms of valuation relative to our current status of the project moving into bankable feasibility study. So Foran and Adriatic have a feasibility study in place, but obviously significant more capital required in Foran, things of that nature. And you can question the legal risk in these sort of issues as well. So I think we're compared to our near-term peers, Span Global and Emerita, this is where the disconnect comes in, and potentially because we are focused on a feasibility study as opposed to just resource drilling and living by the drill bit, that may be a good or bad. But I think over the longer term, we'll continue to find more material, and we'll already have a mine in place generating cash flow. So again, just before I go into some of the appendix slides, which I do want to cover, which is unusual in the presentation, I really just wanted to hit those highlights again, why we think people like yourself should take a look. We have that district scale exploration potential to continue to grow the asset. Obviously, we have 27 million tons today. We think it will be well in excess of 100 million tons, similar to the other assets seen in the belt. It'll take time. It's not going to happen overnight, but I think that's really the target that you're buying into over the longer term. And that district scale discovery potential is prevalent in the belt. So we're not trying to say that we're better or anything else. We're just replicating what has already happened in a different part of the belt, which due to that tertiary cover has given us the opportunity to attack it now, as opposed to projects that have already been around for 20 years. We already have that robust anchor deposit to really fund the long-term growth potential of this asset with that PEA moving to feasibility study over the course of the next couple of months. The team itself has executed this before, both in country and globally. So we're very confident in our ability to raise the funds and the competence to build the mine and bring it into production. And again, the jurisdiction couldn't be better to develop a mine with very much local support in place and all the infrastructure needed. Again, really helping us on the capital side more than anything else. So that, from a straight up investment potential, that's why we really like it. But I did want to highlight a couple of things in the appendices. First, what is the resource base that we're growing off from? So this was the resource base in the PEA. The North Zone already had 10 million tons of measured and indicated at around 9% zinc equivalent. The South Zone, which is less zinc, more copper, had about 4 million tons of M&I. So in the recent round of drilling, the focus has been on upgrading a little bit more material in the north because it is much more economically robust, but also upgrading a lot of the 10 million tons of inferred material in the South Zone to measured and indicated to develop the mine plan. So we expect to be somewhere around that 20 to 25 million tons in the mine plan as we go forward. And we expect the resource grade to actually improve through the infill drilling by able to domain the material better and more understand the chemistry that is involved. When you look at the PEA, and obviously the feasibility study will be slightly different. When you look at the first 5 years, obviously we have to build the mine first. In terms of production and cost, though, on an all-in sustaining basis on a zinc equivalent basis, we're looking at 60 cents a pound for the first 5 years of operation, with an average EBITDA and free cash flow generation of somewhere in that 100 to 115 million dollars over that time frame. So a huge amount of cash generation. But what really attracts us to it, because people say the second half of the mine life, it's not quite as compelling. We actually firmly believe that with the ongoing exploration, we'll continue to push out the lower grade material further by backfilling with new deposits of higher grade material based on the geophysical work we've done to date, which really underscores the potential to continue to add there. So while these numbers are still very economic, we do expect them to be pushed off and enhance the value through new discoveries.
Hey, Cliff, how much of the actual property have you explored, like on a percentage basis?
To be honest, really, we've only focused in on the south and north zone. As I said, we've recently commenced 2 drill holes at the anomaly B and anomaly D. So I would say 10%, if that.
Wow.
Now we do have some high-level geophysical works that is helping us target where to do more detailed geophysics within that 8 kilometer strike zone. But clearly, there's huge potential there. It's just a question of, as I said before, how we get there, how we spend our capital in the following days. And people always say we got an aggressive timeline. Yes, we do, but we're very comfortable because of the various permitting processes that are in place in Portugal, especially given that we have that project of national interest. It really puts the regulator response time into restructured number of days that they must respond. So these are not open-ended amounts of time that the Portuguese regulator has. No, we've done the PDA, so that's been approved. That was done under that 48 days. We're in the EIA process. Expect that to be done in Q3, and then the 90-day recap, which kind of overlaps the 2 processes, which gives us that construction license. So again, we're very much in line with this profile, and really now it'll be about backfilling the feasibility and the capital stack to develop the asset. I won't go through the extensive, the background of everyone. Leave that for you to read. One other slide I would like to highlight is the option earn-in. We're still earning in the deposit. By the completion of the feasibility study, we will have earned an 80% stake in the asset. We've already made all the financial commitments have been paid. So really it's just completing the feasibility study. No real concerns about that. That'll be done well before the end of June of 2023. The other 20% is held by a group called Mineral and Financial, which is held by Crestgate. That's a London listed vehicle who are optioning it off. The EDM has the option to acquire a 15% stake in the asset from Crestgate, and the EDM is the Portuguese Mining Authority. So again, very much likely to see them come into the asset, potentially look at a way to sell it. So at the end of the day, I think Ascendant will have an opportunity to get to 100% in the not too distant future. And with that, that really is, from a presentation point of view, the end of the story. I'm happy to take as many questions as there are within the time allotted.
Yeah, absolutely. And I want to thank Cliff for that presentation. Covered a lot of ground there, and it's clear to me that the company is sitting on a property with solid economics, with many important milestones expected this year, and to be a few years out from actually being in production is great. So at this time, I want to open the floor to questions from our attendees. If you have a question, type it into the Q&A or chat box. Hey, Cliff, late last year, you closed a $15 million financing agreement with Sprott Streaming. What milestones do you think you can reach with those funds? What were the conditions of the agreement?
The conditions, off the top of my head, I can't remember the exact percentage, but it's percentage of the NSR of the mine. So that, off the top of my head, I believe it's around 5%. We do have the right to buy back, and the stream steps down. So in any of the streams as a group that we enter into, we always look at a way over time to regain that through step downs and buybacks. So that was really a way for us to raise money. And we actually raised, as you said, the $15 million when our market cap was probably 12. So again, really underscoring the support we're seeing. The more long-term money, I guess, would be the best description, and very sophisticated group over at the Sprott Royalty and Streaming on what they're allocating capital to.
Yeah, what did they see in the company that they like so much? I mean, that's a pretty big vote of confidence.
Well, one obviously their mandate is to enter into stream, so they're always looking for groups. They fully understand that from our perspective, to raise 50 million from an equity perspective was, in our opinion, as management and major shareholders, prohibitively diluted. So we will continue to look at alternative vehicles to minimize long-term shareholder dilution. We know what we have. It's just taking some time. As I said, initially, the company has gone through some changes over the past 3 years or so and changing of focus. So perhaps we've gone under the radar in a lot of people's minds. But I think as we daylight the feasibility study, we will garner some more interest.
Yeah, one of the questions that just came in, will Sprott be looking to invest more going forward? Maybe, you can talk about that and whether or not, they might be investors, when you're trying to build the mine, in participating in the CapEx funding.
Yeah, as part of the stream they entered into was the right to offer us an enhanced stream going forward. Obviously, that'll be at our discretion. We don't have to take it, but again, it will be a trade-off between what's available in the market, what the equity markets are doing, things of that nature, as opposed to anything else. So the stream itself, I'm just trying to get the details here, just so I'm not making some of this stuff up. So they have indicated a desire to add up to $50 million of additional stream. Not sure we want to do that, to be honest, because it can sometimes encumber the asset. But if we're still trading at 25 cents, that's going to be a significantly cheaper cost of capital for shareholders than trying to issue 25 million of equity.
Yeah. So in terms of, you said the CapEx will go up to about 160, 170. What percentage of that do you think you'll do with with debt, versus equity? Like have you gone through those numbers yet?
Yeah, we've gone through them at a high level. Obviously, we want the actual CapEx number to come back before we get too caught up in that. But, we look at something like 70-30, just given the cash flow that's thrown off in those early years. We'll have less than a 2-year payback on that sort of loan. So that'll be very attractive to the lenders. As I said, equity, if we go with the stream route, would be relatively modest, and that'll be done at the time, we need that decision. It's nice to have the opportunity to have the Sprott stream enhanced if it's offered, and not having to worry about massive equity requirements, especially if the market continues to be less than attractive for junior developers.
Yeah, for sure. A couple of questions, cash on hand and burn rate.
Cash on hand, probably a couple of million. It's not much. Obviously, we're at the point now of just wrapping up the feasibility study. We're not really drilling that much. As I said, we're doing a couple of holes. So we think we're positioned in the near term. We're getting close, but we really want to get some of this news out before we start touching the market.
Yeah, certainly. The pre-feasibility study will give you an opportunity to for a re-rating on the stock. That's obviously going to be very big news. Do you have any kind of lines of credit out there? Is another question that just came in.
No, we used to have a debenture out there that we repaid earlier, I guess, in the middle of last year. So that's been cleaned up, but we don't have any else out there at this point in time.
Okay, so no debt, which was the follow-up question. Any talks with other royalty companies such as Osisko?
We're not gonna talk about who we're talking to, but there's always inbound calls. People, especially from the streamers. To be honest, they're the most available source of capital for us and anyone else in the mining space at the moment. So they're constantly making their calls.
Yeah, and any political risk? He doubts it, but he still wanted to ask. It sounds like you have a really good relationship with the government at this point.
Yeah, no, I think right now with the fact that we are granted a project of national interest, and as I said, the only way you get that is with the local population support. So when you apply for it, the government goes to the local community, the mayor, and says, "Are you okay with this?" And if they say no, you cannot get it, period. So the fact that we were granted that at this stage, again, really underscores the community is looking for jobs. It is a mining area. Don't forget, they've got Almina, they've got Neves Corvo in the not too far district. So they know what mining can bring if it's done properly. In the country itself, they're looking at bringing on some lithium projects in the north. So there again is a bit more of a focus than there has been in the past for bringing mining projects forward, because they're seeing the opportunity that it's brought elsewhere. And obviously Portugal itself within the EU is a relatively poor country. So they're looking at ways to enhance their economy. And I just want to make a correction here. This Sprott stream is actually for 1.75% of all metals produced. And we do have the right to step that down over time to buy back 50% of it.
Great. So from a geology standpoint, can you talk about the importance of VMS deposits? Why have those been so valuable?
Well, over time, VMS deposits, whether they're in Canada, whether they're in the Iberian Pyrite Belt, or even in Africa, the reason why VMS deposits are so profitable is the multi-metal exposure. So if copper's having a good year, or zinc's having a good year, or lead's having a good year, or conversely a bad year, you usually have something that offsets that, whether it's precious metals or one of the other commodities. So you're not that single exposure. While perhaps some people like, I want to be exposed to copper or what have you, over time allows you to have much more stable cash generation than single mining commodities. So this is significantly less volatility than you have with a single commodity mine.
Yeah, absolutely. What are your plans to increase stock liquidity in the U.S. market? It's probably why we're on the call here today. It's just really getting out to talk to investors, obviously, correct?
Yeah, no, things were a little bit quiet in 2022. The second half of the year, the junior market was just not very hospitable. So we reined that spending in a little bit. And as we're now getting to the point that we're going to have some substantial news, which I think could be transformative, assuming the numbers come in as we expect. I think we're going to be working aggressively now over the next few months to make sure people are aware of the story, aware that the numbers are coming, and also really to start paying attention to the new drill results that we would expecting to come in the next couple of months on anomaly B and D as well, really underscoring what we think is some of the exploration potential to really say that this has the legs to be the next Neves Corvo or Aquas Tenidas. And people have to remember those mines were developed over decades and to get to where they are today. So we're still in our infancy.
Yeah, and I think there are definitely a lot of catalysts moving forward for in 2023 and beyond that I think could really give the stock a nice boost. And I think the PFS will definitely play a big role in that. So in terms of the PEA and the PFS comparison, so obviously everybody knows that inflation has played a huge role in CapEx and those types of things. Other than that, though, how do you think it'll change? The numbers will change in that regard.
At a high level, I don't think they'll be dramatic because there's been a change in the mining sequence, how we're going to do the mining. That's offset some other issues within the plant. Knowing the domains within the ore deposits allows for better recovery. And again, it changes the scale of the plant that is required in terms of the back end. The actual underground development, we're not seeing massive amounts of changes in the Portuguese theater in terms of the expected cost there. It's really more of steel and concrete. And so it's there, it's embedded in our numbers in the comments that I've made, but it's still really being finalized. But we're not seeing, as we saw perhaps in the last cycle, these massive 50 to 100% blowouts that we had 10 years ago. Yeah,
for sure. I don't see any more questions in queue. I think we've covered them all. And Cliff, you obviously covered a lot of ground today. So I think at this point, we're going to wrap it up. I want to thank Cliff for coming on today and getting our group up to speed on Ascendant Resources. Put it on your radar. There's going to be some serious, some important news coming out here in 2023 and beyond. There's only a short amount of time between now and production if everything goes according to plan, which I think it will. And it's definitely the right time to be looking at the company, especially with all the recent anticipated milestones that were mentioned today. And we definitely look forward to following the progress. Before we wrap it up, Cliff, I always give our presenters an opportunity to give our group some parting words.
Thank you very much for that, Anthony. And really, I just really want to thank everyone for taking the time out of the day to listen to the story. I know you get bombarded daily with different opportunities and pitches. Hopefully this one triggers some interest. Happy to follow up with any questions you think of afterwards. So feel free to drop us an email or a phone call, and we'll address those as we can. But we really do think we have a new and emerging VMS story here that's really being underloved in the market with a great chance for re-rating over 2023. So with that, I just want to thank you for your time again. Thank you very much.